Oh, that was Breadman. Sorry. Breadman. All right, cool. So today I'm going to go ahead and just do a live recap of how FOMC trading went down. Today was like one of the days where I finally got to sit down and kind of focus on testing a new feature that I've been developing. I don't know if you guys have seen it, but we are pushing a velocity indicator on Heatseeker where over like the past 1 minute, 5 minute to 10 minute period, you're able to see the rate of change of dealer exposure across nodes. So yeah, for the purpose of testing it, I actually did some live trading today. I hopped in the Discord voice channel to essentially catch a short and then catch a reversal from there as well. So ultimately, I thought it was a pretty good day. Like it was pretty choppy midday, but I think a lot of opportunities did present themselves, and I actually think price action was pretty damn clean today. Um, so if people lost money today, or if people thought that today was difficult, then honestly, like I would drop everything you're doing and try to pay a lot of attention during today's session. Like I will run these sessions like once, and then you will have to watch recordings going on forward because there's just so much other shit to cover. Okay. So, yeah, I'll go ahead and do a screen share. Let me just see if I can figure out the best way to do it. 1 second. All right. Do you all see the screen right now? It's my trading. You should see my trading view window, right? All right, cool. So first thing first, like if anybody, so let's go ahead and actually emphasize and focus on like SPX for tonight's session. Like I can go ahead and go over individual tickers too, but it seems like right now, the highest demand like ticker and like the most popular like flavor of the month is SPX. For anybody that knows how I trade SPX and QQQ, I don't only look at the SPX charts when I'm trading it. Like technically speaking, you can just trade purely off of the SPX chart. The reality is that like futures pretty much control like the markets and all of the price movements. It has the highest liquidity, but also there's a lot less gaps in the chart because futures trade like pretty much all day, right? Like they trade in Europe session, they trade in Asia session. So if you look at a chart like SPX, like you've got gaps everywhere, or I mean, yeah, you've got a lot of gaps, right? And it could be a little bit like inconsistent in terms of how the structure looks, whereas ES is just a lot more smooth and like the prices are a lot more well connected. So if you're trading SPX and if you've never charted futures before, then you're probably making a big mistake. And I think that's something that you want to focus on. Um, a lot of people are going to ask like, okay, if we're charting like ES futures, like should we just ignore SPX? And like my answer is no, because generally speaking, the market is moving based off of like not only dealer mechanics, but how like customers and gamblers in the market are buying and selling. And we can't help that there's still going to be a pretty big audience that is just trading off the SPX chart and not ES futures, right? So when I trade SPX, like I'm looking at a couple of things. I'm looking at SPX, I'm looking at SPY, I'm looking at ES futures. But ultimately, like the ES futures does become my source of truth and my bread and butter. No pun intended. Ultimately, because I think that price plays out the most accurately on the ES futures chart. And today I'll go ahead and demonstrate why and how, okay? So let's go ahead and go into the Trinity mode. Anybody that is trading SPX zero day expiration, you should be very, very familiar and you should become very, very proficient with Trinity mode. Ultimately, like we show the first column, the first expiration column across the main tickers, which is SPX, SPY, and QQQ. There was a pretty significant demand for this, so we ended up launching it. I'll go ahead and replay all the way to like 9:30. And ultimately, like I will just go ahead and do a walkthrough with regards to like how I am perceiving and viewing things as the map progresses, okay? So, right off the bat, like I'm not super bullish on how everything starts off. Like this is 9:37 in the morning. If you look at it, you've got this cluster of like, deflective yellow nodes here at 60, 684, 683, 682. And then on the QQQ, like it's interesting because you've got a bunch of like, purple like X nodes right below, which means that SPY is kind of deflective and pushing down from above, whereas QQQ has these cushions and like reversals on the downside. So, first thing first, like that is diverging. So for me, like, it's a no play. It's like a chop setup or a whipsaw setup, and I don't really care to play it. Um, Also, like what happened early on in the morning is that on the SPX, the 6740 and the 6735 popped. This is not uncommon for FOMC days. Like when I see like crazy nodes that are popping up 100 points away from the money, suddenly like this. Like generally, I pay very little attention to it, and I would call them like, decoy nodes or like hedge nodes or something like this. Like for FOMC or like, OPEX days or days that have like crazy news, this is not uncommon, okay? So like I mentioned this to people and I was like, yeah, the 6740, 6735 is there. Like that's way too far out the money, so don't get fooled by it. Your source of truth should be a combination of the three, which is saying if SPY goes down, it'll eventually revert back up towards 683 and 684. If QQQ goes up, it'll eventually revert back down to like 623, 622, and 620. Okay? So right now, I don't really see a good setup. Okay. Like now you've got a little bit more clarity. Like 683 is like massive here. Like 683 is pretty massive. You've got 6845 that is like the next upside ceiling here. Um, and then QQQ is not showing a good short opportunity here because like it's already falling into a cluster of Yak floors here at 623 and 622. So let's see, the time is 9:39 here. Let's go ahead and zoom out here and look at the chart and see what we're doing at 9:39. Okay. So at 9:39, like it looks like we just bounced and we hit a reversal here. There's nothing much happening here. No trade. One thing that I do draw like early on in the day though is like, I actually go back and what I do is I try to look for like major massive wick liquidity levels like this one where like price tapped it and then it had like a really instant like major rejection from it. So these are the levels of interest that I'm kind of like keeping my eye on in terms of liquidity levels. And if you do an SPX to like ES futures conversion, what you'll realize is that the 6850 line, it pretty much coincides with this line here at like 6845 or something like that. It's like pretty damn close. Okay. So, what I do is like I drop the lines on SPX, I draw them on ES, and then I look to see where they coincide in a line. Maybe actually I can use like a split view to kind of make it easier for people to see. Um, I don't use the split view often. But, all right, so there we go. The fuck am I looking at? I got lost. The split view is so confusing. I know a lot of people use this, and I don't really like using it because it's pretty confusing to use. Anyways, fuck it. We're going back to the single view. So anyways, like I draw the lines out and then I'll show you where I entered the first short, okay? So let's go ahead and play it back. Like the first thing that I'm thinking about is like if the price approaches 683 or like if it even overshoots 683, like for me, like I don't see any good potential upside, right? Because yellow nodes are meant to and expected to be deflective in nature. So what this means is that if 682 starts going up into 683, and if QQQ starts to go up towards 625 right here, there is a potential scalp opportunity for a rejection to the downside, okay? Not only that, if you look at the SPX, the main like barrier to the upside is going to be 68.45 right here. And right if I even eyeball it slightly, what I'll notice is that okay, if 68.35 starts going up towards 68.45, if 682 starts going up to 683, if 623 starts going up towards 625, then I could find a pretty decent risk to reward short opportunity, right? So on SPX, what I do is I will pretty much draw a line here at 68.45 where like my potential like short target was. On SPY, you could do it at like 683 or somewhere like there. And then QQQ, you could do that like 625 or something like that. I think QQQ is like a little bit higher up. For me, the thing I care about the most is the 683 and then the 6845 because like this is a very, very major wall that I don't think it's going to be able to cross. So let's go ahead and see how it played out. So pretty much like I am a reversal trader. So like I'm not gonna wait for the dump to happen before I enter the trade. Like look here, now we're at 683. We're at 68.42 here. And now we're approaching the 625. So we actually have like a potential like 1 point drop opportunity on QQQ. On SPY, you can go ahead and play a deflection scalp. And the thing I like about SPX is that if it does reject 68.45, like you've got an air pocket down here from 68.40 all the way down to 68.25. So you actually have a pretty decent opportunity for it to drop through like this air pocket, like that's what I call it. And that's generally a good setup for potential like short opportunities to play the deflection. So let's go ahead and see how it played out. All right, so first rejection we got here at 68.45. Like we actually did drop down to 68.25 right here. Like that's pretty much how it played out. Like the air pocket that I'm mentioning is, let me just see real quick. Like right here. Like this air pocket is what I'm looking to take advantage of on the SPX. Like if price goes up towards here and then rejects down, right? So that was the first short that I took. I think we probably took like anywhere from like 30 to 40% on this one, surprisingly, because the premiums were not moving were not moving that great here. Um, the reason I take profits towards this level is because if 68.25 is like where your like gatekeeper node is, generally speaking, you always want to give it a plus minus 5 point margin for a reversal. So as it's approaching down into 68.30, like you should already be trimming and taking profits. Okay. So yeah, we'll talk about the 6900 as well. But first thing first, like it's still very, very early in the day. And like I expect, like there's no shot that early in the day, like SPY is going to overshoot 683 and just keep on pumping. Like later, there is an opportunity to play the 6900 node, but you will see how SPY kind of supported that move, whereas earlier on in the morning it didn't. Okay. So that's pretty much like your first short opportunity. Like let's see how it played out here. Like it hit the 683, rejected the 68.45. It's already down like 11 points right there after it rejected it, right? And the thing that you could do here, it might just be skipping numbers because I'm doing it at 1 minute each. But even when you're here, for example, like what you'll see is that the 683 doesn't quite let off, even though the price is dipping. Also, what you're going to see here is that on QQQ, you see the 629 rising, and then you've got like a 622 floor here. So effectively, what I'm seeing that aligns here that I care about in terms of like buying the dip is that you've got this like floor node right here that's pretty much fresh and that's been untapped. And then you've got this 622 which is a floor, and then you've got the 629 starting to accumulate. Like what you'll see on QQQ is that despite the price dropping, you'll start to see 629 and 631 start to accumulate here, and then you'll see 683 like staying pretty strong. Okay. And then if we keep on scrolling through, like eventually what you'll see is that, we do tap. I mean, you could just look at it from the chart perspective. Like you'll see that it does tap 68.27, it reverses, it heads back up. And in terms of this reversal, like if I'm looking at only the SPX chart, like it, yeah, I'll go ahead and show the ES chart as well. So on the second attempt, what I noticed is that we got a pretty good pump here. And then over here, this is at 10:48 a.m., right? If you look at 10:48 a.m., hold on, let me just remove these annotations real quick. Alright. So if you look at 10:48 a.m. right here, you have this massive green candle right here, but look at this. Remember this liquidity candle that I drew right here? The perfect rejection, perfect rejection, perfect rejection. And this rejection is actually still in play. So this was this was like your second test of that upper like SPX node. And like this is the second short that we cut right here. And then the reason that we got out of this one right here at the low, like the dot is actually not the reason why we got out right here. Remember what I was saying is like if you're trading SPX or SPY, like you need to have a multi-dimensional view of how QQQ is running as well, right? And even if you look at the QQQ ETF chart right here, there is one level that you need to be watching that you should not ignore. And this is another massive liquidity level here. This one from yesterday morning down at 621. Look how much it wicked from here. Like this is a fucking massive wick. This is like it's a $2 wick that happened within 15 minutes. Like that's pretty massive. So, and it's also a fresh untested liquidity level, which indicates that as price pushes down into this one, like I'm expecting these people that bought the dip back here to defend this level at least one time. If a lot of people understand like the math and the formulas behind like how I determine probabilities of reversals, what I mention is that double bottoms and double tops have and hold the highest probability of reversal. So for me, like there is no shot that I'm holding my puts and expecting QQQ to be able to punch through below 621, okay? And I'll go ahead and show you what the maps look like at this time. This is at 11 a.m. All right. So you got 11 a.m. right here. And like the great thing here as well is that it actually like even SPX supports the bounce right here. So you've got a bounce zone at 68.25 and you've got an air pocket here again that you can bounce up through towards 68.45, right? And then if you look right here, this QQQ is at a floor right here of 620, like getting pretty close. And then the 683 is like still pretty decently lit right here. So bare minimum, you can expect like a 1 point reversal or something like that. But again, as I mentioned previously, if you're playing the deflections, good thing is, even if you don't get that high of a range upside, just because you're lowballing the bid on your entry, like you actually get really, really good fills in terms of like how cheap you're able to buy the contracts. And because you're getting a good fill, even if you get like a 50 cent or a $1 bounce in the spot of the QQQ, like you're up immediately 30 to 50% on your contract. So first thing first, like, the great thing is like you've got 620 support here. You've got 68.25 support here. SPX is showing 68.45 to the upside. You've got this crazy 6,900 node that's been accumulating like all fucking morning here on the SPX. Like that's very, very suspect. And not only that, like you've still got like the 629 and the 631 here, which you always need to keep an eye on. Like when these nodes are growing, like they're in play. Like what I mean is that they're hot, they're in play, and there's a high probability for these to just start exploding out of nowhere. The reason why I encourage people to play deflections like this is because after the reversal happens, that's when everybody's going to start piling in the calls, resulting in higher exposure to the upside here, okay? So like this exposure is not just going to keep on growing like out of nowhere before a reversal happens. The reversal is going to happen first, and then the true cards will start showing itself, and then you'll start seeing the buy loops going through, okay? Yeah, the 6730 and the 6740, like it was accumulating, but not by much, like maybe like 10% or like 20%. Like these nodes here were always staying between like the 8K to like 12K range. Like they never went up crazy, like their rate of change was not that great. And again, like in it, yeah, so that throws you off, but like every FOMC, like you just need to be aware that these can be decoy nodes and there's a high probability that they will be decoy nodes. Like I mentioned this in like 5 different videos that I've recorded before. So if you're getting baited by a node that is literally 100 points out of the money on FOMC day, then there's a little bit of studying to be done, right? Like don't just get blinded by these decoy nodes and be like, okay, all of this shit doesn't matter up here. Like the nodes that are closest to price are going to be the ones that matter the most. Like that's where they're going to react from. Yeah, generally speaking, the rate of change is going to be important because like that's kind of showing the freshness and like the most up-to-date action that's actually happening in terms of the exposure levels. All right. So earlier when I was in a live session, like what I was mentioning is like I shorted the SPX 68.45 and then we were at like 110% on that one. We ended up taking profits because we saw QQQ slamming into a double bottom support. Like if you're approaching a double bottom support, no matter what anybody or anything says, like just take your profits. Like it's not worth trying to, fight a potential reversal here. If anything, like you should be closing your puts, or if you're not in puts, like you should be looking to snag calls right here because like look how aggressive that bounce was too. Like you got that perfect bounce right here, and you literally fucking ripped all the way back up to 624. That's a 3 point rip within like a 15-minute period. Like no red candles here. Okay? So when I'm telling people like your confirmation shouldn't be after the bounce, like your confirmation should be like where do you expect buyers to step in? Like you need to be playing chess and not checkers, right? Like don't look at buyers step in and be like, okay, buyers are stepping in, so I'm gonna go ahead and chase this candle because your risk to reward is bad and you're also overpaying for premiums. You have to be ready and you have to have these levels drawn and be like, okay, like what were the levels of interest yesterday? What were the levels of interest for the week or for the month? And like, especially the ones that are untapped with like major wicks like this, like you better bet there's going to be a potential bounce at those levels, right? So let's go ahead and see what happened. Like you got the 620, like the 621 right here, like you got a bounce. Like this was the perfect opportunity right here. Like the 620, 68.25 right here. Like you got a nice bounce here. You've got an air pocket all the way up to 68.45. That's a potential 20-point reversal. And like, let's just go ahead and see how it played out. Like, look how fast it rebounds. All right. And the 627 becomes the king node here. Even on the SPY, as it approaches 683, the good sign and signal for bulls is that the 685 is growing rapidly. So it's at 45 mil right now. But you see what I mean? Like it was 30 mil earlier. It's at 45 mil. That means this grew in size by 50%. Like 50% rate of growth is massive within a 3 minute period or a 4 minute period, right? Like those are the things that you should be careful, like you need to keep an eye on. Like these nodes, 6740 and 6735, the rate of changes on these were rather dormant. Like they were pretty static, meaning that the likelihood of them being a hedge by like a single institution or a player is very, very high. Okay. So the day keeps on playing out. Like the 627 QQQ becomes pretty massive. 685 is accumulating here. You see 6900 grew by like, 20 or 25% right now. And after that point, like that was pretty much the bottom of the day. Like everything just kept on ripping from there. All right. So let's say you missed this reversal, okay? If you missed this reversal, quite literally like just fuck off for the day. Like I tell everybody in the chat, I tell everybody in my videos, but the market will present you 2 to 3 really, really good opportunities every single day. Okay? So far, on the SPX, you had clean short opportunities here. You had another clean short opportunity here. And these shorts literally gave you pretty much zero drawdown. Like that's the importance of like playing deflections and reversals. And the reason why I tell people like play reversals, look for deflection setups. Like don't look to short after you see like the traditional way people trade is like they see 3 red candles like this and they call them the 3 black crows. And they say that's a bearish pattern. After the third one, they're going to go ahead and short it. They literally are shorting the bottom and they're becoming my exit liquidity because that's actually where I'm exiting my short, right? So like the reason why I tell people to ignore candlestick patterns and like ignore all the stuff that people tell you online is because they're like those concepts and that educational content is literally designed to make all retail traders become exit liquidity, okay? Like the kind of trader you need to become is the person that's going to snipe your short entry right here, snipe your short entry right here on this green candle right here, even though it's scary, and then get the best risk to reward entries. Like if you want to play a double bottom right here, like fucking perfect. Like look at this massive red candle. Like is it scary to enter there? Yes, it is, but like I mean that's the market, right? Like you've got to be able to put up risk and you've got to be able to like if you're going to put up risk anyways, you might as well do it for the maximum potential reward, right? No, I'm not going to go over a rug pull setup, man. Like that's been covered too many times. Like we've got documentation on it and it's not super relevant to today's session. But anyways, like that this is a good short right here. This is a good short. This is a great long. That's already 3 really, really good setups that you saw with like very, very minimal drawdown. So like once this plays out, like we're entering this lunch hour of like 11:20, 11:30-ish. Like you should not even be trading. Like you shouldn't be looking for setups at this point. And like it's literally all chop. Like you're not making any money on this, right? I mean, 683 is the ceiling, but did you not see the 685 accumulating 50% in value like as the reversal was happening? Like I just covered that like 3 to 5 minutes ago. Like the thing that I'm mentioning is like you have to play the deflections. And like if you don't see a supporting move in the other exposure and like other nodes that are accumulating upside, then you can go ahead and close it out for a quick scalp. But if you're seeing 685 accumulating and if you're seeing QQQ accumulate higher as well, then you've got an opportunity to stay in that trade longer. I mean, bro, I mean, we've all been doing it for a long time. Like the thing that like I worry about is like everybody thinks that everything can be solved by new shiny feature. But what I'm really trying to teach you guys is like the mentality shift that's actually required for you to become a successful trader. Like the way a lot of people are trading right now, like no matter how many features, no matter how much value added like alpha that I provide in the tool and the application, like you're not going to do well because you're too scared to enter where you should be entering. Like most people, like I look at their chart and they've got so many indicators on there, and I'm like, if you've got that many indicators on there, like how are you even reading price, right? It's like that's what people need to fix. Like you guys really have to like minimize what's actually on your chart and like just look at like just try to read price and understand how price moves, right? Like if you withstand all of this chop, like let's go ahead and see what happened. Let's take a look. So FOMC was at like 2 p.m., right? Like you got this little pump right here, like it broke through. Like let like I think even like right before FOMC, like you could have played a deflection. Like I actually never encouraged playing it, but like let's go ahead and take a look at what things look like at 13:54 right before the reversal happened. 13:54. Okay. So this is what it looked like at 13:54. Like this 630, like if you look at this, this is at 14 mil right now. That was at pretty much nothing earlier. Do you see the difference there? Like it pretty much grew like 1400%. Like that is massive accumulation. And now the range on the QQQ that you have is like this. You've got this, you've got this, and then you've got a reverse rug pull setup right here. A reverse rug pull setup is a purple node above a yellow node. And if this claims, you're going to get a buy loop. It's going to hit the 627, and then your next potential target is going to be near the 630. Okay. Like at this point already, like you're seeing a 7 point potential reversal here. And then you've got the 6845 here. And remember, with the purple node, if you clear this, you're going to end up in a buy loop by the market dealers. And this all becomes an air pocket right here. Like this is a pretty decent air pocket right here. And then you've got a potential move up to 6,900 right here. Okay. So let's go ahead and see how that played out. All right. Okay, so now you've got the explosion right here. Like you see the 630 is still growing. Like earlier this is 14 million. Now it's at 20 million, okay? So it pretty much grew like almost another 40% or 35%, which is pretty massive. Now you've got further accumulation here at 632 that's also supporting the move. And the 6,900 has grown to 9 million here. And then now here you've got a perfect range between 6,845 as your floor, these as your interim targets, and then your final target here at 6,900. Okay. Your risk to reward here is a 5 point potential risk with a reward of 50 points. That is a massive, massive, massive risk to reward setup, right? You take that any day of the week, okay? And then you've got support here at SPY 683 now. As long as 683 holds, like we're looking bullish on the day. As long as SPY is above 683, you've got nothing to worry about, okay? Like, just look at this shit. 630 is at negative 27 million now. Like, this shit was at zero earlier. Okay. And like, this is the one that I called out in the SPX regards channel. Like, I was using, I mean, I even asked people, like, I mean, I asked if people wanted me to deploy the change to see the rate of change, but people wanted to do it after hours, so I didn't release it. But I was still using it on staging, and I showed people, like, the 630 node is fucking exploding. Like, I told them it's exploding. I told the 6900 is exploding. Like, everything is pointing to go long here. And then you've got a fucking massive ripper right here. And this is the crazy part, right? Even if you missed this initial ripper, what did I mention here? You've got a beautiful range here between 68.45 to 68.65 to 6900, right? So 68.65, let's see what it did there. Okay, you've got a pretty decent rejection here, 68.65. You got rejection there, but look at this. It comes back to 68.45. So even if you missed this initial breakout, which I obviously did, because I don't like trading breakouts, you could have caught a perfect, literally a perfect reversal snipe here at 68.45. And even if you look at the ES chart, you got the same level of confidence here. Remember this liquidity mark that we had at 6 a.m. right here? Look how perfectly it lines up right here for this reversal as well. And right off the bat, 68.50 all the way to 68.86. You've got a 36 point reversal within 9 minutes. Like that is literally an insane play. And if you missed that one, all right, like let's say you weren't ready and you missed that one, or like your broker froze up on you and you fucked up. A double bottom has a 67% chance of a reversal, and our target on the SPX is still up at 6,900. You have no excuse for having missed this second reversal right here. Okay? Like if you missed both of them, then like, I think you've just got a lack of confidence and you've just got to practice this a little bit more. Um, but like these were all fucking golden opportunities. Like these are literally insane like risk to reward opportunities that you're just pussying out on and missing. Okay? So like, I just encourage you, like just do a little bit of practice and like try to become a little bit more familiar with like how to trade the maps. Like take my advice seriously when I tell people to start playing deflections instead of trading like breakouts and momentum. Like stop chasing momentum, stop trading breakouts. Like just trade reversals and deflections and your portfolio will thank you. So now you'll not only have 6,900 here, like you've got a new player here at 6,925, but do we expect SPX to actually go to 6,925? Absolutely not. Because 6,900 is going to become a gatekeeper. It's also an even number, which means that there's high chance of reversal. And the 6900 lines up pretty well with 630 on QQQ. Okay. So like sure, like it could give an additional pull, but most likely what's gonna happen, like even when 60 is here, I'm expecting us to go up here, but then eventually like reject, right? So let's say you're little Timmy and you missed this trade and you missed this trade. Okay. The last incredible trade of the day that you could have caught is right here at 6,900. Okay. So let's see, 6,900 is a major yellow node. Let's see what time we hit here. I think this is at around 15:30. All right. So this is at 15:30. Like if you look here, right? This is your king node, 52 million, and the 6925 is very weak. Like when you're looking at this, there's absolutely no shot that the 6895 is going to be able to just go straight through, okay? What's likely going to happen is it's going to come here, and then it's probably going to reject close to 6890, which is your floor here, or slightly lower. Because remember, purple nodes, once they're there, they're going to result in a pro-cyclical move, meaning if you're selling, then dealers are going to sell into the move. So you would take profits at like 6890, but you might get potentially lower from there, right? So already, as SPX is approaching the 6900 king node, And as QQQ is approaching the 629 king node, like the thing that I'm looking to do is like I'm looking to play a deflection back to the downside, okay? Like you've got two of these well in sync. You've got the SPY at 688. So you mark your level right here at 6,900. And in this massive green candle right here as it's approaching it, like the reason why people are scared to short here is because they see a green candle and they're like, holy shit, that looks bullish and that looks strong. But you got to remember, everything looks bullish before it looks bearish. Everything looks bearish before it looks bullish. So don't wait to short when something is bearish. Like you want to be able to be ahead of the move. Like a lot of people are going to disagree with me here, but like, you're welcome to do so. Like I just don't believe in chasing moves. Like I will never chase moves. I will always let the moves fall into my lap, and I will literally short this massive green candle that a lot of people are scared to short. Like as we're getting this green candle punching into 6,900, I've already got my Webull order execution screen ready. I've got 30 contracts queued up, ready to buy. And if the bid to ask is like 5.20 to like 5.40, as this green candle is printing, I'm gonna go ahead and put my limit buy at $5 so I can go ahead and lowball the bid. And as this green candle prints, and as the people that were initially trying to short are stopping out of their positions, I am getting picked up with those lowball bids. Like immediately you get a rejection. Like even with a little bit of chop, like my position is green or break even at worst. And like you've got a stress-free short. Like, sure, if you like break above it, like you can go ahead and take the L. And like those are gonna happen. Like you're gonna miss your, snipes and sometimes you're gonna be wrong. But like at least you set yourself up with the best risk to reward setup where you've got asymmetric risk to reward. Okay? And then remember earlier what I was saying is if 6,900 rejects, we're expecting to go down to 6,890. So the next thing you want to do is you just draw a level there, and as this red candle is printing, you're like, okay, I'm gonna go ahead and sell my puts, and then you just go ahead and close them out. And like, sure, it dropped like 3 more points afterwards, but like you don't have to be that greedy. Like a 10-point drop in the last, 20 minutes of market close, like this is gonna go ahead and print a good 300, 400% right there. All right. Does that all make sense to everybody? Like, dude, this is literally like this FOMC was fucking golden. Like the levels played out perfectly. Like the nodes played out really well. Like the rate of change on these nodes were literally insane. And like if you if you found yourself to be red or if you were confused, then like this is going to be a good video for you to watch like 10 times or like 20 times in like the next week. Like you just have to like people just gotta grow some balls. Like you've got to be ready to fade a move. Like, it's like people have been trading momentum and breakouts since the COVID days. And like you have to understand that like market characteristics change. And if everybody is trading the same exact way since the COVID days, like you would be dumb to think that institutions and market dealers are not catching on and changing the game up on you, right? It's like those old strategies, like they don't work. Like they work when the market's bullish and only going up, but like when it's in a range, or when you're trying to like trade into a supply zone, like, you shouldn't be trading momentum and breakouts. Like later on, like if we get like some kind like I mean, you could trade momentum and breakouts after we drop all the way down here, right? Like I think here, let me show you. Like if you really want to trade momentum and breakouts, like this is how you do it. So zoom out to the 4 hour. You've got a pretty massive like, this is a nice little level right here, right? What do you call this? You call this a liquidity hunt. A liquidity hunt means the prior prominent support level. What they're going to do is they're going to go ahead and dump the price below it and make it look very, very bearish. Everybody's going to stop out of their long positions that are in their 401k or like their RSUs or like, long positions they've been holding for a long time because they think the market is going to break down here. Okay? What the institutions are doing here is since they know everybody's going to be panic selling into this potential breakdown candle that all the retail traders are trading, what they're going to do is this is where they're going to buy all of their positions. They always get the best entries, and we should also be getting the best entries. Like these are the best entries. If you enter anywhere around this level right here, Then you could start trading momentum and breakouts, okay? Because we've taken out enough liquidity to the downside to have a very aggressive like V reversal back to the upside, okay? But you've got liquidity here, right? You've got liquidity here, and you've got liquidity here. Like these are not levels where you should be trading breakout and momentum. Like there's so many potential areas it can reject or get caught up on. Like if anything, like right now day trading is really good. Like I just wouldn't be trading like momentum and breakouts and like chasing moves. Like you're just gonna get a lot of chop or you're gonna get a potential rejection and like you're gonna cry. Like this is where you should be in longs and where you should be trading momentum. Like not when you're in a supply zone like this, okay? So that's pretty much my explanation. Like, it's not that I'm completely against momentum trading and like breakouts and like chasing moves. There's just a time for it, and there's a time where you can't be doing it. Like, the reason I like to trade reversals is because whether it's a chop market, whether it's a trending market, whether it's a momentum market, in most scenarios, it works out really, really well. It's pretty much a universal strategy where even if you're in a trending market, if you're pairing it very, very well with Heatseeker, you can actually fade a move and you can still get out with 30 to 50% profits as long as you're sniping a really, really good entry. Okay? Like that's why I live and die by the reversal strategy because whatever the market condition is, you are going to have an opportunity to make money. Let me go through some of these comments. Am I scaling it? Okay, hold on. Mr. OO, you need to see the rate of change feature. Um, So pretty much when it's ready, I'll go ahead and push it tonight to beta users. But pretty much when it's ready, like you're gonna have these little badges on top of the nodes that kind of indicate like the percentage growth or the percentage decrease of the particular node. And you'll pretty much be able to. Uh, it's kind of lagging right now. Anyways, you should be able to click into it, and you're gonna go ahead and start to see like little sparkline graphs that show you. Um, how much the node has grown or decreased in the past 1 minute, past 5 minute, and past 10 minutes. Kay, you said, what do you do if it just starts barcoding? Do you just hold until it gets invalidated? Yeah, that's pretty much what you do. And like this is also another reason why I tell a lot of the newer traders to just have your size as your stop loss. So this is one thing that's really, really important. If you're not already consistently profitable, you have no business trading with a 10% stop loss or a 20% stop loss. Like this is a hill that I would die on. Like people like there's a lot of traders that I respect as well that preach using a 20 to 30% stop loss. I am completely against that idea. I think it doesn't give new traders enough margin for error to be able to experiment and truly learn how to become a sniper. Okay? Instead of taking a $5,000 position and having a 20% stop loss, which makes your max loss on the trade $1,000, if you truly want to become the best SPX trader, you are better off taking a $1,000 position and having zero stop loss, which makes your max loss still 1,000. But even if you mistimed your entry or if you get caught in chop, you have a lot more margin for error and you have a lot more time for the trade to work out in your favor. SPX zero-day expiration, for people that understand the gamma effect, gamma grows stronger and stronger as you near the close. What this indicates is that even if your contract is down around 50 to 60% going into the last hour of trading, if you get a really, really nice move in the intended direction that you're looking to trade, your negative 60% contract can easily come back to life and close at like 50% or 100% or even 500%. I can't tell you the amount of times I was learning to trade SPX and I would stop out because I sized too large and I would be scared of the losses that I have in my active position. and I would close it for a 50% loss, or I would close it for a 60% loss. And by the close, those contracts would be up over 500% or over 1000%. Okay? Like I'm speaking from experience when I say this. Like don't make life harder than it needs to be. Size smaller, have a much looser stop loss. If you don't want to have a non-stop loss position, then take a $2,000 position and put a 50% stop loss on it. Then your max loss is still going to be $1,000, okay? But your margin for error becomes a lot higher. I'm not telling people to never size up, okay? I'm just saying this because I know that 95% of you out there are not profitable SPX zero day expiration traders. So until you get to the point where you're profitable, why not give yourself more cushion and why not give yourself more margin for error where even if your entry was not picture perfect and like sniper perfect like Guillermo does, like you still have a chance at closing and knocking out a profitable trade. Like most of you right now should be in experimental phase and like you should be learning and you should learning like you should be trying to perfect your entries. Like then you keep on learning, you make money here and there and like compound gains is like very underrated. Like compounding gains is real. Like even if you could do like 20% profits like week over week, like you'd be very, very surprised at how fast your portfolio can grow. And as you become more proficient, as you become more precise, which I guarantee you will if you keep at it, there will come a time where you can go ahead and increase your position and you can put a 20% stop loss or a 30% stop loss. Like sometimes when I trade like a 50K size or like a 100K size, like I trade with like a 20% stop loss. Like I do that now. But like I just don't encourage it for everybody because like it took me literally years to be able to get to a point where my entries can be this precise. Okay? So like I'm not telling people to not have a stop loss because I want you to trade like that forever. I'm telling you to do this because right now you're in a phase where you should be learning. And during this phase of learning, like you should just give yourself the best chance and best odds of being successful. All right. So, okay, that should pretty much answer your question. Like if you're sized for zero, then if it's barcoding, like you're fine because even if it goes to zero, like that's what your initial intended max loss is. And then if the position does play out like you expect, then you're going to get out green. And if it doesn't, then you're fine. But let's say you entered a $10,000 position and then you have a 25% stop loss and you get caught in a barcode. Then you're going to stop out. And then after you stop out, the move that you were expecting is going to play out. You don't want that to happen. Swap on for intraday trading, like I pretty much live and die by the 3 minute chart. Like that's my favorite to use. It doesn't have to be everybody's favorite. A lot of people are successful with 5 minute charts or 15 minute charts. So just use what's most comfortable for you. Yeah, at 627, how are you still confident that 630 is up next and won't reject back down? I mean, 627 could reject back down, but like that's still a good trade. Like if you take profits at 627, like you still banged out a good trade. Like for me, I think the conviction was that 69 was gonna hit, 6900 was gonna hit on SPX, because that node was just fucking monstrous. Yeah, HJ for the air pockets, like you just have to kind of eyeball it. Like the reason we use a heat map form factor is because like the gradients help you understand like how weak or how strong a level is. So you've just got to, I mean, you've got to kind of train your eyes to just be able to see these air pockets. I mean, I guess you could say like if they're less than like 10 to 20% of the value of the king node, like that could be considered part of the air pocket. But for me, like I just look at the map and like if I look at it like it's just visibly obvious to me that like price can move very fast through a particular level or zone. I mean, let me actually see real quick. So if you look here, you will notice that on the left side of the extreme, you've got very, very dark purple, and on the right side of the extreme, you've got very, very bright yellow. Like anything that's like in between right here, like that's considered the zero zone or the zero range. Like those like neutral colors are what I consider like air pockets. What did I use to scalp the bottom of Bitcoin? I didn't scalp the bottom of Bitcoin. I actually rode that like $10,000, so I wouldn't consider, I mean, that was a pretty decent trade. But I think the reason I took that one was honestly, I don't even know. Like, I just saw everybody on X was being so fucking bearish on it. And I saw MicroStrategy was getting ready for a reversal on the heat map. So generally, if MicroStrategy is showing a potential reversal, you can expect Bitcoin to have a reversal as well. So that's ultimately why I traded it. Like, I was looking at MicroStrategy, and what I saw was that it was retesting a pretty like major level, like right around this level. Um, and then even from there, like you've got another one right here. So like the range that I wanted to buy Bitcoin in was like this breakout retest level on MicroStrategy right here, like right there. So when this bearish candle printed right here, like that's pretty much when I told people like, okay, this is gonna be a good dip buy. And then like, I mean, it still went from like 166 all the way up to 200. So, for me, that's a pretty good trade. Like that's just how I trade. Like everybody thinks this looks bearish, but for me, like I think that's an arbitrage opportunity. Like I want to get in longs when everybody is like giving up on a ticker. Yeah, breakouts are tough. Like I think the breakout game and strategy is like very outplayed now, and it just doesn't hold its edge anymore. I think the breakout that like even if there is a breakout, like nowadays, like they don't even give you an opportunity to play it. Like look at Amazon. Like this shit, like they did everybody really, really dirty on Amazon. It's like what I was looking at was this level for a breakout. Like I actually drew this up and then I posted it in the channel and I asked if anybody's going long on Amazon. But like what you'll see is that from a breakout standpoint, like this is a level that you should be playing off of. And then they fucking like they literally gapped over it. Like I'm pretty sure they gapped over it today. Yeah, like look at that. They gapped over that level. So unless your entry was here yesterday, like I mentioned when I said Amazon was bullish, like if you're trying to trade a breakout, like you would have missed it because it gapped over it. And then now everybody was forced to they were forced to chase this, and then they fucking pulled it back, so everybody that chased it got fucked. Yeah, 6,900. I don't know how you lost money on the 6,900 because I played that exact trade. And like I got out at 80% on my initial entry and size, and then I looked back at it and it was up like 450% at the close. Yeah, if you bought at 1692, you're way too early, brother. Yeah, don't trade based off of your thoughts, like just trade based off of the data. If you try to have like a preconceived opinion of something, then you're not going to be successful in trading. Like you just have to trade based off of data. Yeah, I can go ahead and re-upload it. I am pretty sure I recorded it. The lines that I'm drawing are they're gonna be like Heatseeker node levels, or they're just gonna be based off of like pure price action. Jack, in terms of how I balance the plus minus 5 points, like it generally is dependent on um like all of the other nodes. Like the reason why I shorted SPX closer to 6,900, the reason why I shorted SPX closer to 6,900 is because QQQ still showed potential upside. If QQQ was already at the king node or shot past the king node, then I would have shorted SPX a little bit sooner. But QQQ still showed potential move to the upside, and SPX is at 6,900. So the max risk I was willing to take on would have been like an entry at 6,900 on the dot. Like I wouldn't have bought it at 16.95 because QQQ is still showing potentially higher, meaning that SPX could have even shot past 6,900 by like 5 points or more. So hopefully that answers your question. Yeah, the Timmy hunts are fucking money. Like I don't like that's why I tell everybody to just erase every single indicator off of your chart. Like you don't need indicators. Like I'm terribly sorry, but like if you don't know how to make money just off of support resistance and Heatseeker, you have no business using any indicator out there. Like absolutely fucking not. Like indicators are literally just a distraction to make people feel like they have an edge, but ultimately it leads to you becoming an exit liquidity. And then you're gonna jump from indicator to indicator to keep on looking for the holy grail and like you'll never find it. Yeah, Vikas, you're crazy, dude. Vikas, you gotta chill, dude. I don't know why he showed it at 68.92. The percent change print gets updated every minute. All right, so beta users will have access to the new rate of change feature now. So this is in production. So the first thing first, like you've got this little pop-up right here that will show you like the top movers. And then if you click on a particular node like this, it'll go ahead and show you the trend of that node exposure over time. And then it'll show you over the 1 minute, over the 5 minute, over the 10 minutes. So hopefully that helps. You have to click on the number for the chart to pop up, not the actual node itself. You actually have to click on the number. All right, so beta testers, you can go ahead and test it out. I'll create a thread for you to post any bugs or any issues in it. Yes, Scar, that is correct. Tom Bulmer, I use the glitch analysis channel. Like I don't really post alerts or anything like that. Like I trade pretty big money, so generally I'm not a big fan of posting my positions in public. And going into January, like I'll actually be trading like a multi-million, like almost a $20 million port. So I do not want a bunch of retail traders like being in the same positions as me. Like I don't even think I'm allowed to, given the position I'll be in. Victor Lee, like if I'm down 80%, but then the contract comes back to say 20% negative 20%, do I exit? A lot of times I actually do. Like there's a lot of times where like I'll enter a position and like I'll only be up like 18 to 20% and I will take profits because the hypothesis doesn't support a further move in the direction that I was intending. And like I'll just take like a 15 to 20% scalp. And sometimes I'll be down like 50% on a trade, and then I'll be down only like 15% on a trade because something worked out in my favor, and I'll go ahead and close it. It all depends on how like the dynamics of your initial hypothesis is trading relative to how much time you have left for the trade to play out. Like obviously, like you don't want to be stupid and like you've only got 5 minutes left and you've clawed your way back from negative 80% to negative 15%, and then you let it go back to negative 100%. Like this is just all like active dynamics of how you have to manage your trade. Like I don't think there's a right or wrong answer there. Like you've just got to be able to manage your trades. The cost, like, dude, honestly, man, I think people just got to take a chill pill sometimes. Like, especially after people go on win streaks, like I see them, like, I see them trying to trade more, or like I see them doing some crazy stuff, and I'm like, yo, like, just take a step back and like, can you just enjoy and relax a little bit? Because Like I think the biggest challenge that people have is just like sitting on their hands. Like the maps are gonna show nothing and like they're still gonna try to trade. I think like the past 2 days have been shitty going into the FOMC. And I told people like wait until FOMC because we're gonna get a lot of volatility. Like you need volatility to make money in the markets. But like, yesterday there was like a map that showed like a 5 point range and like I saw people going crazy over it. And I was like, these people clearly don't know how to sit on their hands, so they're just losing a shit fuck ton of money. Like, a lot of people think that Heatseeker is valuable because it tells you where price can potentially go. They couldn't be further from wrong. Heatseeker is valuable because you know what the ranges you could trade in are going to be, and you know where dealers have to react mechanically based on the book. Like that's the most important part. But in layman's terms, like the best thing about it is like it tells you when you should trade versus when you shouldn't trade. And like that's going to be everybody's biggest barrier. If you're trying to, if you feel obligated to trade every single day, you will never become a successful, profitable trader. Like 100% not. Like you got to get to a point where you're gonna not take a single trade on any given day and you feel totally fine because you know not losing money is what successful trading is about. But like some of the people I see, man, like they fucking hop on and like they're going Rambo and they're like, dude, I gotta take a trade and like they're pinging me left and right saying they're down to their last 50 bucks and they need a Hail Mary and I'm like, dude, today's not the right day for it. When drawing support resistance liquidity levels, I don't, yeah, that's a pretty tough question. Like I don't really have a clear answer. Like I usually just look at the 1 week, I look at the daily, and I look at the hourlies. But the only levels I'm going to care about are the prominent levels that are closest in proximity to where current price is. Like I'm not going to care about a level that's like 20% away from current price. I think the biggest mistake that a lot of newbies make when they, so the biggest mistake that a lot of newbies make when they first start charting is they chart every single support, resistance, and liquidity level they see on the chart instead of focusing on the ones that are immediately close to current spot price. So if you look at my charts, like I have like three horizontal lines or four horizontal lines max, like why do you care about a level that is 20% above current spot when there are two other major levels it has to clear before it gets there, right? Yeah, I talk a lot about the actual execution of trades. Like I think just buying through limit orders and choosing the right pricing is kind of a like there's no technical science behind it. Like it's almost like a vibe instead. It's like I'll look at the bid and the ask and I'll be like, if somebody fills me at $20 less than what the current bid is, this trade to me is going to be worth it. Like that's literally how I bid on things. Like I'm like, what am I willing to pay for this contract? And then that's what I'm going to put the bid at. And then if you don't get filled, then fuck it. Like you probably lowballed and you deserve not to get filled. And that's fine. Like I've missed out on tons of like 500% opportunities because I lowballed too much. But that's ultimately what drove me to become so precise in the way that I trade. Like you've got to be okay with the missed opportunities if it means that 90% of your other trades are going to have really, really good entries and you're never going to chase. Yeah, you could trade SPY instead of SPX for learning. And like, yeah, XSP is good too, but the liquidity is not as good. Yeah, getting filled at deflections is not about what the ask is going to be, it's what the bid is going to be because you're generally wanting to lowball the bid to get in. Yeah, you just got to practice it, man. Nomadic, like you just got to practice it. Like, a lot of people are like freezing and they're getting scared, and it's because you're just sized too large. Like, if you're just doing a single contract risking like, 50 to 100 bucks, like you're fine, right? Right? Hopefully, nomadic, hopefully that makes sense, man. Like you shouldn't freeze. Like you just got to keep on practicing. Like a lot of this becomes muscle memory. It's like driving or learning how to operate machinery or something like that. Like you've just got to keep on practicing it and ingraining it and like, building it into muscle memory. Over time, you start to build instincts as well, which is like even without knowing what's going to happen, you just get a general idea and you're like, yeah, I've seen this shit before. Like I know this rodeo, and like you'll just know what to do. Like that's why the screen time is important. That's why it's important to be patient, but that's why it's important to solidify a unified strategy that you can continue to practice and repeat instead of jumping from indicator to indicator to indicator until you've gone through 150 of them, only to realize that the indicators are not the problem. Like I know people that trade with zero indicators that are profitable. I know people that have a 40% win rate that are profitable over a long period of time because their risk to reward is that good. If you can't watch charts all day and day trade, then you can use it for swing trading, and I've got a ton of videos on swing trading. Um, I don't know what the abandoned baby candle entire X was pointing about. Generally, if entire X is talking about something, I don't really care about it. How I draw levels before the market. I actually don't draw levels before the market, to be completely honest. Like I really don't. Like I just wake up on the day and then I look at the nodes and I look at where the most prominent node is on SPX. And then from there, I draw the levels that seem like they're tapping liquidity that are closest to the nodes that I'm expecting dealers to react at. But John Wicks might have some pretty good like practices and procedures and ideas. Yeah, it's so funny because like everybody's surprised that NQ and like, ES is dumping, but like, I mean, why the fuck would it be dumping? Like, why is NQ dumping? Like, nobody should be surprised that NQ is dumping right now. Fucking look at that shit. Like, why is anybody surprised? Like, if anybody is fucking trapped in longs, like, they fucking deserve it. Like, look at that. That's a little Timmy Hunter right there. Like, don't fucking long at a double top like this. Like, it's the dumbest shit ever. Yeah, Oracle is probably gonna hit 190 tomorrow if this keeps up, if this sell keeps up. Like if this shit keeps dumping, like, honestly, like the next dip buy level could probably be right here. Like this is probably we're probably gonna catch some bids here on NQ. Like if I just eyeball it, like I know we're gonna catch bids at 25,283, right? Like you've got a support level here, you've got the resistance here, you've got another resistance here, right? So just let it come down and retest the structure. If a node doesn't have a number, does that mean it's a gatekeeper? No, it means it's an air pocket. That means there's no exposure there. Yeah, I selected a group of beta testers like a couple of weeks ago, and yeah, it'll get released to everybody else soon. So just stay patient. Yeah, HJ, just like you're mentioning, like Heatseeker is great for swing trading as well, but like you just have to swing trade properly. Like I think a lot of people um are not trading right to begin with, and that's going to become a problem. Like even if, like whether you're day trading or whether you're swing trading, like just learn to become a reversal trader, then like your office job is gonna be fine. Like you'll be fine trading while you're working your office job because you're literally sniping the lows and you're sniping the tops, so you don't have to stress about like, drawdown or like risk to reward and stuff like that. Yeah, 2024, good shit, man. If you're watching my videos, then you're gonna fuck it, you're gonna be massively successful. Like most of the people that I know that are like really, really good traders now, like they listen to my voice before they go to sleep for like 2 or 3 hours every single night. No, I didn't say I enter by 10 to 20% of the current price. I lowball it by 10 to 20%, yes. So if the bid is at 5.20 and the ask is like 5.40, I will go ahead and lowball it at 5.00 so I get filled below the bid. Because remember, when I'm buying longs into dump red candles. So it means after I place the order, the price is probably going to drop a little bit more, and that little bit more drop is where I get filled right before it reverses. Like I buy shit when it looks really, really, really fucking ugly. Like I literally buy like red candles like this. Like you see this candle right here? Like as like I will buy longs at these candles right here because that's when premiums are the lowest. Like nobody wants to buy there, so like I buy there, and then when these wicks happen, like you're fucking up money. Like you're up big money. Nick Monardo, I don't know. I didn't do that much research into that. It's possible. I'm not entirely sure. Yeah, you could trade futures with Heatseeker, like just use SPX and QQQ and stuff like that. Yeah, it's important to follow NQ. NQ and ES and RTY should be everybody's bread and butter, and also YM. Like it's a lot of shit to look at, but like that's trading, man. Like trading is not easy. Like it's actually very, very hard. Like trading is very difficult. I think a lot of people like are just not made out for it because they're not willing to put in the work and they're not willing to invest the time and effort and the discipline that's necessary. Like I equate profitable and successful trading to becoming a professional sports player. Like it's literally that difficult and you're competing against the best people in the world and computers. All right, I gotta hop off. I gotta take care of my kid real quick. I think he's sick. I'll catch y'all later. Yeah, rate of change will be on Trinity, yes.